Apple became the world's first publicly traded company to hit a $1 trillion valuation on August 2, 2018. The company slightly crossed the lofty mark in a closely watched rise that made history in the stock market. At the time, the $1 trillion market cap was approximately 5% of the total gross domestic product of the US. The valuation put the company under scrutiny. But how did Apple become the world's first trillion-dollar company? In today's video, we will look into how Apple became the world's first trillion-dollar company. But before we dive in, remember to like this video and subscribe to our YouTube channel. The company reached a historic milestone after hitting a $1 trillion market capitalization 42 years after it was founded. The landmark valuation came a day after posting strong financial results, which pushed the company's share price to $207.39. The share price gave the company a $1.002 trillion market capitalization. A combination of a progressively engaged consumer base and a stable macro environment led sales in all regions to grow by a double digit. This was a clear path to the $1 trillion mark. Another factor that pushed it to hit the milestone is that Apple is one of the most widely held stocks globally. It pays dividends to millions of investors who own its shares directly as individuals or indirectly through pension funds. The company's health ripples through the entire US economy and its markets because of its value and size. As it reached new heights, Apple was carrying along with it investors and customers. Apple's share price has grown 4 times since Tim Cook took over from Steve Jobs in 2011. The valuation meant that Apple's stock market capitalization was more than a third of the United Kingdom's economy and more than the economies of Switzerland and Turkey. While PetroChina, an energy company, had been cited to be the first company in the world to hit the $1 trillion mark, the valuation was unreliable because it had only released 2% of its shares for public trading. Saudi Aramco, Saudi Arabia's national oil company, could be worth $2 trillion after its planned flotation into the stock market, but the value was not tested. The release of quarterly financial results better than Wall Street's expectations powered Apple's share price. The company had record sales of $53.3 billion and profits of $11.5 billion in 3 months. The results pushed the iPhone maker's share price higher, raising its value from $935 billion to slightly above the $1 trillion mark. The company was sitting on a mountain of cash reserves worth $285 billion in 2018 and had made a net profit of $48.5 billion in 2017. It had returned nearly $25 billion to shareholders through its capital return program, including $20 billion in share repurchases. The company's astonishing performance left its rivals trailing in the competitive tech sector. Facebook suffered the worst day in the US stock market history after its shares dropped by more than 20%, causing a loss of more than $120 billion in its value. Amazon, which had been viewed as the next most likely to hit the $1 trillion mark, was left behind even after posting higher than expected results for the same period. Steve Jobs, Ronald Wayne, and Steve Wozniak co-founded Apple in 1976 and are credited for designing and developing its first desktop computer, the Apple I. In 1977, the company produced the Apple II. Wozniak primarily developed both these computers while Jobs handled marketing. Apple II drove Apple's revenue until the mid-1980s. Though the company developed Apple III and Apple Lisa, the two failed to catch up commercially, making the company struggle financially. The release of Macintosh was a leap forward, but IBM had caught up. Internal struggles and disappointing revenues led the board to appoint John Sculley as the chief executive. Despite being one of the key pioneers, Steve Jobs resigned in 1985 after falling out with John Sculley, the chief executive. Jobs started working on Next Inc. Sculley served as CEO until 1993. Apple enjoyed strong growth during the period. It developed products like laser printers, PowerBooks, Macintosh Portable, and the Newton, which were selling at a premium. The margins were generous, leading to strong financial results. Cheap computers running Windows emerged during the same period and served a larger middle market. Windows had the advantage of running powerful Intel processors. Apple could not compete against the relentless spread of Microsoft operating systems. Two chief executives, Michael Spindler and Gil Amelio, could not turn the tide against Microsoft, which had become the industry standard, and Macintosh was underperforming. Steve Jobs returned in 1997, when Apple acquired the workstation computer company Next for $427 million. He would become the chief executive shortly afterward. Apple was near bankruptcy, and many people thought it had lost its way after losing its market share to Microsoft. But Steve Jobs revived its fortunes by working closely with Jony Ive, a British designer. They combined pioneering technology with sleek aesthetics to develop products like the iMac. Jobs used a robust marketing campaign and launched the iMac featuring the slogan, "Think Different." He is credited for spending time and money on marketing and branding, which have been the key to Apple's success. The key differences between iMac and the other products were its design and beauty. But it was the decision to move from personal computers into personal gadgets that turbocharged the company's fortunes at the start of the 21st century. The results were the design and development of disruptive products like the iPod in 2001 and the iPhone in 2007. These gadgets pushed technological boundaries and became cultural landmarks. There had been more than 10 different iPhone iterations since its launch, and more than 1.2 billion units had been sold by 2018. The gadget accounted for 60% of the company's $229 billion in annual sales. Apple's success made Jobs one of the most respected business figures and investors globally. Jobs' health forced him to retire in 2011, handing over the company to Tim Cook. The company continued to extend its reputation under Tim Cook by betting on risky products like the cordless AirPod headphones and the Apple Watch. The cordless headphones were an innovative product that dispensed the need for headphone jacks for its phones. Despite the success, Apple faced controversy and criticism for its workers' labor conditions and attitude towards tax payment. The European Commission ruled that the company should pay 13 billion euros to Ireland in back taxes. The Commission found that Apple's use of arcane corporate structures in limiting its tax payments was illegal. It later emerged that Apple had secretly moved vital components of its empire to Jersey, a complex rearrangement that allowed it to maintain an ultra-low tax rate. The company faced accusations for exploiting Chinese employees in 2011, amongst a series of suicides at its supplier's factory, Foxconn, in southern China. There were allegations that employees were working excessive hours and in poor conditions at Foxconn. Do you think Steve Jobs is behind Apple's success? Let us know in the comments section. Please hit the like and subscribe buttons. Thank you for watching.